I don't know if investors are getting big hugs. They're getting big something or another. Brian Westbury, Dave Maney. On that, Dave, to you first. This angst that's gripped the market. Sometimes, and as you reminded me in the past, and Brian has as well, this markets could take up a mania or panic of their own and build it irrationally to no bounds. I'm wondering, because and we all lived through the 2007-8 experience, whether it's feeling like that to you and that it's beyond logic now. What do you think, Dave?
Markets always have their own behaviors and their own psychology, as you know, Neil, and things can get crazy at any one moment. They could have also been crazy in the other direction. The more I think about what we've got going on, the more I think it's a tale of two cities, but the same thing. It's China and the United States who have both ascribed now for several years to the idea that that central governments can make better decisions than individuals can in a capitalist market. And so instead of millions of us, hundreds of millions of us making, billions of us making decisions all at the margins and keeping everything on a steady course, you get central governments or federal reserves coming into the center and saying, we'll make the allocation decisions, we'll decide what outcomes should be, and we are smart enough to dictate that. And then the day that everyone wakes up again, as they do time and time again, the day they wake up and say, oh wait, it's not working, then they go into this panic you describe, and we have a day like today.
Brian, what do you think?
Yeah. You know, it's kind of an interesting thought, and I agree with a lot of things that Dave said. Governments cannot allocate capital correctly. And the Fed has printed a lot of money. They did $3.5 trillion worth of QE. They've held interest rates at zero. But if anybody can prove to me that that's what's driven the stock market up, I'm at a loss, because PE ratios today, price earnings ratios, are lower than they were in 2008.
So what's going on? Then, Ryan, what's going on? What are they doing?
Yeah. And so what I believe, if you really look underneath all of this, we have all this great new technology. I mean, we could list it all, and it's driving earnings up. Productivity and earnings have been rising, and that's why the stock market's higher. So I don't look at this as some kind of realization that, oh no, the sugar high is gone. I look at this as just a market correction. We're having a tantrum, and we've had them before, and we were down 1,000 points a couple of years ago on one day. So what's 400 or 500? It's like, look, we're underneath. The economy is still growing, entrepreneurs are still working, and profits are still rising. So far this earnings report, 75% have beat. Banks beat today. Banks are better capitalized today. We are nowhere near 2008, not even remotely close to something like '08.
But, you know, Dave, my crackpot theory, and I have many, and I think I'm an expert because, as you both know, I read a prompter for a living, so give me my due respect. And I think what the market wants, a bear market. It is touching close now, 13, 40% from our highs. If you look at it, let's share, and some of the wide-based averages, they're already well in bear market territory, and they want that. They, whether it's a cleansing thing, whatever, I think they want it. What do you think?
I think that could be right. It goes to Brian's statement, which is a great phrase. Is it a sugar high? The better question is it a sugar high, or have the markets been, high on methamphetamines, which is far more damaging when you come off it, right? If it's a candy bar and we were just a little overexcited, that's one thing. If it's kind of a systemic, multi-year problem, then the come down's going to hurt a lot more, and it's going to look more like what you just said, Neil. It's going to feel and look more like a bear market than just a mild correction.
So we haven't had a bear market in a while, Dave. If it gets to that, I'm sorry, Brian,
that's okay.
Is that a worrisome development right there? Because once at a bear market, you just don't zing out of it.
Yeah, well, you know what? I don't believe. I guess maybe I didn't make my point clear. I don't believe that the last 6 years has just been a sugar high or a methamphetamine high. The Fed bought a lot of bonds, but the banks never lent it out. It's all sitting in excess reserves. All these people who said that the Fed was driving the economy, they're the ones that predicted hyperinflation, $5,000 gold, a collapse in the dollar. None of that ever happened. In fact, the dollar's stronger weaker today. Gold has come down from its highs. We have low inflation. That money never made it into the economy. So the Fed is kind of the toothless tiger, if you will. They've done a lot. Everybody, waits for every word they say. But in reality, the banks run the show. And M2, the money supply that Milton Friedman told me to watch, is only growing about 6% a year. It's not falling. It's not accelerating. It's growing about 6%. So I would expect the same kind of growth this next year as we've had in the last couple. And what I'm saying is that the markets are acting on emotion. It's not reality. And I don't believe this has been a methamphetamine or a sugar high in the last 6 years. It's been driven by profits. That's what's driven the market higher, and it will continue to in the years ahead.
We shall see. Gentlemen, I want to thank you both very, very much.